to the next article, we'll see this issue of GST revenue growth, wherein the government has said that there is a dip in terms of this revenue growth in an year-on-year comparison and also a monthly-based comparison. Look at this previous year question. Enumerate the indirect taxes which have been subsumed in the goods and services tax in India. Also, comment on the revenue implications of the GST introduced in India since July 2017. This has been asked in 2019, and by and large, number of times this GST had been a focal area by the UPSC. As you see in this context, the revenue generated through GST in this month of December has crossed 1,64,800 crores, and which is 1.8% lower than the amount collected in November. What is the significance of this issue? Before that, we will see the basic definition related to GST, and it is clear that GST is a supply-based tax, and at the same time, it is also referred to as a destination-based tax. The supply begins from the production firm to the extent of the ultimate consumer. So this entire process of production and distribution, whatever is involved, this is part of this entire supply chain. GST is imposed upon this entire supply chain of goods and services, and at the end, the destination point is what the one which actually pays this entire tax. Hence, it is also referred to as destination-based indirect tax. Second, the GST as a reform has been brought in as part of a number of initial reforms which have been implemented in the form of either moderate or SINVAT, which is referred to as Central Value Added Tax. It is to simplify the tax structure, wherein the simplification of tax structure involves what is referred to as reducing the cascading effect, by which it means that if I am buying a particular soap at 40 rupees, then we know that this 40 rupees is inclusive of various taxes. And all these taxes are indirect taxes. Suppose if there is involvement of some raw material in the form of milk in manufacturing this particular soap, then the producer would have already paid the indirect tax, and this indirect tax might have also been included within this 40 rupees. So whatever the tax that he has paid, which is already there in this particular price, and when I am buying it, I am now paying the same tax again. This is what is referred to as duplication of tax, or this is also referred to as cascading effect. Because on the same tax that the manufacturer has paid, as this is part of this maximum retail price, the tax that I am paying as part of this particular price involves even the tax on the tax. So the cascading effect is in fact tax on tax. It is this that we want to avoid through this particular taxation. So what GST does is it taxes only the value addition in the entire supply chain. This is the significant change that we brought in through this GST implementation. And moreover, as you implement this with the involvement of simplified procedure, on the other hand, addressing this issue of cascading effect, this creates a condition for ease of doing business, and also this creates a unified national market because of this. It is this basically we have as part of conceptual understanding. On the other hand, as you see, there are certain fundamental features that you see with regard to the goods and services tax. And this unifies Indian market into one single entity. This is held as part of one nation, one tax regime that the government was trying to bring in. On the other hand, with respect to direct tax code, there are multiple concerns in bringing in what is referred to as one nation, one tax. But with respect to the indirect taxation, GST has provided that particular leverage. Second, it involves what is referred to as dual structure, by which it means that there is a component with regard to states, because number of state taxes have been subsumed into it, and there is a component for the center also, because even the central taxes, which are indirect taxes, have also been subsumed into this one single entity called GST. So this is referred to as SGST and this is referred to as CGST. And whenever there is cross-border trade between the states, then this is being referred to as IGST, integrated GST. In value terms, it is equivalent of both SGST plus CGST. This is the dual structure that you have pertaining to GST. Third, as we have already seen, this is the destination-based tax. Whichever is the end consumer, that person or that entity is going to pay this entire tax. Fourth, there will be multiple tax slabs. As you know, there are certain tax slabs such as 5% or 12%, 18%. This refers to the multiple slab tax structure that it has. Fifth, this calls for what is referred to as input tax credit. As we have seen earlier, in order to remove the cascading effect, what it does is it provides this mechanism of input tax credit. A particular manufacturer has manufactured the soap and now it is going to the distributor, and from distributor to end consumer. In this, the manufacturer might have already paid certain tax on the basis of whatever the indirect taxation that has been imposed. Let me assume that the manufacturing cost has been 40 rupees and then 10% of tax has been laid upon it. So this makes it extra 4 rupees, and hence at the factory gate it is costing at around 44 rupees. Now when it goes to the end consumer, let us assume that it is being sold at 50 rupees. What the input tax credit does is the manufacturer in fact doesn't pay any tax. However, this particular amount is calculated. It is shown as if he has paid the tax, and after adding this particular taxation on the basis of whatever the value addition that the manufacturer has done, this goes to the distributor and then to the end consumer. By the time it goes to the end consumer, the distributor profit, whatever has been included, let's assume 2 rupees or 3 rupees. On this, there will be additional tax, and inclusion of this particular tax, the end consumer would be buying this particular commodity. In case, as the end consumer is paying even the tax amount that the manufacturer has made, this amount will be refunded to the manufacturer. This destination based tax means this input tax credit mechanism will remove the cascading effect by making it a burden on the end consumer who is purchasing this particular commodity in the entire supply chain. This is the nature of the input tax credit. On the other hand, online filing and compliance has made it a simplified procedure. Moreover, there is a threshold which has been defined for certain particular sectors, and with respect to that threshold, there are certain exemptions which are provided. And these exemptions can also be extended to many other sectors as part of decision made by the GST Council, which governs the goods and services tax. Having seen the key features, we'll move to the trends which are seen with respect to this revenue growth, particularly the state-wise growth trends. As you see that there are states which have recorded a growth of more than 13% or more. These 13 states have been performing well with regard to GST revenue collections consistently. Second, the leading states, as you see, are Arunachal Pradesh, Haryana, Goa, Jammu and Kashmir and Tamil Nadu. This order seems to be important from the examination point of view. Please keep that in mind. And there are certain states which have recorded a growth below the national average. Particularly Rajasthan and Chhattisgarh, as you see, they have recorded a mere growth of 1%, and Gujarat at 7%, Madhya Pradesh at 11%, Kerala and Uttar Pradesh at 12%. Both Rajasthan and Chhattisgarh can be considered as significant from the examination point of view. Now, when you see these trends with respect to revenue growth for the respective states, remember that one of the high frequency indicators for the measurement of underdevelopment or the slow economic growth in a particular state is the development distance, and this development distance will have the tax collections also as one indicator on the basis of which we demark whether a particular state is developing or not. And there is also one more fact that we have to keep in mind. On an average, this represents a 12% increase, as you know, from whatever the average that we used to have earlier, which was at 1.49 lakh crore. This is something that is very important in terms of pattern. And moreover, for last 7 months, we see that the revenue collections have exceeded this 1.6 lakh crore. This indicates that there is increase in the tax base, as you see here, increase in the tax base in terms of number. And number two, the long-term trend growth that you see consistently since the end of the pandemic is clearly being consistently occurring in Indian economy. It is this which in fact has led to increased collections for last 7 months more than whatever the earlier average that we had. As you see in this particular chart, the trend in the GST collection can clearly show that the growth in comparison with the previous month has always and consistently been higher and higher. This is one pattern that we have to again keep in mind. I repeat, compared to each and every month in 2022-2023 financial year, in 2023-2024 financial year, the GST revenue growth had been consistently higher in comparison with the previous months in the previous financial year. However, we have two fundamental concerns with regard to the GST growth. First one pertains to the states which are resource rich but do not have any substantial presence of manufacturing industry, wherein the GST being the destination based tax, much of the resources which have been mined in the states, for example Jharkhand, are going to other states, and these states benefiting these resources are paying these particular taxes. So the states which are resources rich, they claim that we are losing out our revenue because of the lack of industrial presence. This is the first concern. Second concern is that the input tax credit mechanism, I repeat, the input tax credit mechanism, even though functioning very well, as we see in the current scenario, large chunk of money is lying idle within this particular mechanism pertaining to the emerging GST related disputes and the presence of what is referred to as many litigations in the tribunals, GST tribunals. These are the two important concerns that we see as a pattern emerging with respect to GST revenue